U.S. News, 9th of October 2023, as U.S. investments decline, desperate China funds turn to cash in the Middle East. Western investors no longer view China as their first choice for investments, and the country stands to lose about $2 trillion in sunk costs. China is searching for more fools to invest there to support its collapsing economy. As many American investors flee the country due to dangers and political problems, managers claim that Chinese funds are looking for new sources of cash in the Middle East and other regions. This move could change the country's dwindling investment flows. 7 China equity firms, comprising mutual funds and hedge funds with a combined asset size of over $500 billion, told Reuters that they have been to the Middle East this year to raise capital, with 3 of them doing so for the first time. Investors from the Middle East are eager to commit more capital to China because they stand to gain from lower prices and the stimulus provided by the Chinese government to aid in the country's economic recovery. As a result of the numerous hazards that have forced American companies and investors to withdraw from China, Chinese funds are now searching for other opportunities to reduce their need for American investment. China-owned companies make up more than half of the hedge fund market in Asia, so the hunt for fresh funding may have an impact there. Brokers and related businesses might shift their emphasis to offering services relating to the Middle East, which is not a particularly capital-rich or risk-averse region. The United States used to be the gold standard for capital raising, according to Effie Vasilopoulos, co-leader of Sidley Austin's Asia-Pacific Investment Funds business. However, there is a genuine need to replace the U.S. investors' money with other capital that is less risky due to the tension between the United States and China. Due to this dynamic, many of our clients are moving to the Middle East. 4 out of the 7 funds managers who were in the Middle East talked on the condition of anonymity because they had not yet attracted any new investment. However, the positive response has managers expecting a more significant change. In contrast to other investment groups, sentiment about China is more favorable among Middle Easterners, according to Stephen Look, CEO of Fountain Cap Research and Investment, one of the 7 funds that traveled to the region this year. Certain sovereign wealth funds are overweighting China, he claimed. They talk more about how to play China instead of why China. The long-only stock manager, which has been making investments in China since 2015, said that inflows primarily from Europe but also from the Middle East were responsible for nearly doubling its asset size to $2.1 billion since the end of the previous year. After years of strained ties and intimidation by the Chinese Communist Party, the company hopes to establish contacts in Australia to raise finance. According to Aaron Wu, head of investor relations at OP Investment Management, a Hong Kong-based hedge fund platform, several advisors have also followed suit and increased their footprint in the Gulf. Political financial though views on whether China's undervalued markets represent a good investment have been divided and largely hostile for months. It was unclear whether a military war in the Middle East would accelerate moves among regional investors to allocate beyond the United States. Large American investors have reduced their exposure to Chinese stocks in the last year, including Texas Teachers Pension and California State Teachers Retirement System. Nonetheless, many significant purchasers have been Middle Eastern government funds, who can afford to lose a little cash on a gamble. Compared to an 8% rise for global markets this year, MSCI's China index is down 11%. The strategic choice is a Politico investment, according to Wong Kok Hoi, CIO of Singapore-based APS Asset Management. On the one hand, China is cheap, and on the other hand, they believe they need to diversify away from their US-centric investments. This year, investors from the Middle East and Africa contributed new funds to APS. According to Wong, it may be too soon to tell how the crisis in the Middle East will impact capital flows in the months to come. Still, investors in the region should stick to their long-term plan of increasing their exposure to non-dollar assets, which may include investments in India. In fact, given the current unstable climate and the higher oil prices that benefit the oil-producing nations, the pace might even quicken as they have more money to invest.